Now to managing your money. If you filed for an extension for filing your taxes, it's time to get organized. The deadline to file for the completed form, it is coming up for individuals and businesses. So we're bringing back Charles Wells with Charles Wells Tax Service in Youngstown. Thank you for joining us here on the Labor Day holiday.
Thanks for having me.
Yes, so the tax extension filing deadline, that is coming up soon, October 15th. What do filers need to have prepared, and when should they get an appointment so that they're organized and they don't miss their deadline?
So I would recommend making an appointment as soon as possible. You want to give your tax preparer as much lead time as you can afford. And as far as what they need to have is basically going to be the same as what you would need during the regular tax season. You'll want to have all of your income statements. That's going to be your W-2s and 1099s. If you are going to be claiming any business deductions through your Schedule C, if you're self-employed or an independent contractor, you would want an accounting of all of your expenses as well. The only item that might still be outstanding is K1, and that's an income statement for partnerships and corporations. Now, those returns are due September 15th, or the extended ones are due September 15th. So you might have to wait for that statement, but other than that, you should have everything you need at this time.
And what are some of the major deductions this time around that people can take advantage of?
So there's really 4 noteworthy deductions coming out of this new law. The first will be tips. There's a deduction for overtime, one for car loan interest, and then there's an additional $6,000 that could be deducted for individuals 65 or older. So the tips, that's exactly how it sounds. If you make tips in an industry where it is customary to receive tips, that could be deducted from your income. As far as overtime goes, you can deduct the amount that is above and beyond your regular pay. So if you're getting time and a half, you could deduct the half time. So you'll pay tax on the straight time, and you could deduct the amount that's above and beyond. For car loan interest, you could deduct up to $10,000 of interest on a car, and that has to be purchased within the calendar year or after December 31st, 2024, and it has to be assembled within the United States. And then finally, there's the $6,000 additional deduction for individuals 65 or older, and I think that that's really meant to address Social Security. So people always ask if Social Security is taxable. It is to the extent that you make money outside of Social Security. That remains the same with this new law, only you do get an additional deduction. So you should be able to reduce your income, which should reduce the taxability of your Social Security.
Yeah, which of the deductions did the big, beautiful bill that just passed change anything for taxes? Did it change anything at all this year, or is that the next tax year?
So this will be effective for 2025. So these extended returns that are coming in the next month or so, it won't make any difference there. But it is effective as of January 1st, 2025. So when you go to file in 2026, these will all be in effect.
I think a lot of folks are wondering, what if you miss this extension filing date and you're not ready to pay or file or whatever you don't have ready? Can you file another one?
No, so there's no secondary extension. My recommendation to people who owe money, whether they can pay it or not, is to file that tax return as soon as possible. I always try to remind people that the extension is not an extension to pay your taxes. It's an extension to file your taxes. So that liability is due April 15th, whether you file an extension or not. They've been charging you interest on it ever since. So by filing by the extended deadline, you will avoid the failure to file penalty, which is going to be much worse than the interest that is being charged. And that will also allow you to set up a payment program. So I would say file as soon as possible. That'll avoid that failure to file fee. And then once you establish the liability with the IRS, that will allow you to set up a payment program with them.
All right, great advice as always. Charles, thank you so much for joining us here on Labor Day as we work on our taxes, and you and I are working too. So thank you for joining us.
Great. Thanks for having me. Thanks.